Hello to you all, this is Catalin, and today I would like to introduce the latest update that I've made for one tool to rule them all. In this case, the new parameters that I have applied to it are volatility based, and in this case, it's going to help a lot more with day trading, maybe with the swing trading as well, but in general this is meant for those that want to enter and exit from the trade within the same day. I made initially this part of the strategy, for myself, for the stock market, because I want to day trade in the stock market. However, I realized that it can also be applied, to any other market in the end. The main new changes that we are going to have in this case are going to be the average true range value, which we are going to take a look at the latest 2 weeks of data, and we are going to look at how much a certain asset, like for example in this case we have the Bitcoin, how much it moved during the last 2 weeks each day. So in this case, for example, the value that we have is going to be 1.8 thousand. So after that, the thing that I am doing, I'm taking the current point, like for example in this case we will take this closed, and I'm looking for example for the tunnels. So we can see that in this case our tunnel, in this case it would be from current point, which is 43,300 to 45,200. So this can act as a support point for us, as a resistance point for us, while the below point, and we go for example to 41,500, and this one for example it can act as a resistance, as a support point for our trade. In this case, for example, if we would go long. However, the better way to calculate all of this, it would be to go at the beginning of the day, like for example the beginning of the day it would be at 12 hours, the middle of the night. So we will go at the middle of the night and we will apply all of this then, and we just have to wait a little bit for the data to make the calculations. So we can see that in this case the actual true values from this point would be 45,600 approximately, and the other one it would be 41,775. So this should be our points of trading. Now, based on this, at the same time, for stocks and also for the Bitcoin and ATH, you can apply this as well. We are going to apply another type of of calculation, the daily moves, and the average true range in this case is going to be an historical value. So we are taking a look, for example, in this case at the last 2 weeks of data, and based on this we are going to make a daily average movement. However, for future movement, we have another concept which I explained as well in the stock course, and if you didn't watch it already, I truly recommend you to go and watch it. And this concept is the implied volatility. The implied volatility is the type of volatility that the people, better say, expect that a certain asset is going to have, during the movement, for example, of today. This implied volatility, I'm not going to enter too much into the formulas because, like I said, all of this is explained in the stock course. But yeah. So this implied volatility in general is going to be higher or bigger based, on certain movements which are going to happen. Like for example, yesterday we had the federal meeting, the federal minutes meeting based on, on the March decision that they took. So based on that, yesterday, for example, it was a day which would had much higher volatility than, for example, today, because if we go in the economic calendar, today we don't have so many big news, that can affect the volatility. But yeah, maybe for example the initial jobless claims, but still, it's not something that is going to affect us so much. While for example the other one, the FOMC meeting, it was regarding the inflation, and that concept is going to affect all the markets in the end. So yeah, so this implied volatility in general for the stock market, you can take it from the option chain, like for example bar chart. It's a good example for this one. So this one, for example, you can see in the bar chart, we would go on volatility on Greeks, and here, for example, we would have the implied volatility and the historical volatility. And those values, for example, in this case, this one doesn't work anymore because it's already expired. We would have to go for the 8. Yeah, sure, lock in. So in this case, for example, we can see that for tomorrow, the implied volatility would be 20%, while the historical it would be 21%. Anyway, I'm not going to enter into this one. So yeah, this would be, for example, for the SPX. And however, in this case, for the Bitcoin, we have the Levitas platform, which is taking data, you know, from the derivative broker, which is the biggest broker, I would say, in terms of volume for option trading for crypto. And in this case, for example, we go on the BTC and we go on the volatility, and we are going to go, you know, on the implied volatility and realized volatility. Like I said, the realized is more or less close to the ATL value. You know, it's close to it. However, in this case, the range, you know, is different calculated. And we can see in this case the implied volatility for today, 7 of April on BTC, it's actually 58. So we are going to go in this menu here and we are going to write 58. And we can see in this case, if we are going to write 58, that actually the true values that we expect from today, the implied, are going to be 44,900 based on the current point. So we will go on, let's go back again, you know, on the 12 hours, because I did everything for the 12 hours. Yeah, the beginning of the new day. So in this case, once again, we are going to put the same value. We have 58. So we can see instead of this one, we are actually going to be somewhere around here. And instead of 41, we are going to be somewhere around here. So now you can see that actually this can act like an even better, I would say, you know, support and resistance point for us. And we can have an even more defined channel for us to use and understand more or less how the prices can go or not. So we know that in general, during the day, you know, the movements, they tend to be pretty cycle. Like, what does it mean? Like, you know, this asset, yeah, for example, right now we have a pretty big downtrend and we kind of like broke this part. But most of the times it tends to go, you know, in waves. Like it goes slowly up, down, and continue to go that movement. So for example, sometimes you can use these points as a scalping. Like for example, look at, like for example, we would be here. So for example, once we would reach close to this point, like for example, what had happened here at 42,600, in this case, our margin of probability and profit, it would be much higher than usual, because in this case, we would have a movement of 1.5% of support that we not support, but as a stop loss, better said, that we could use. And we know that most of the times, in general, when these parts, yeah, they are going to be broken. They can be broken. But most of the times, like 60 to 70% of the times, they are going to rebound, you know, from these places. And based on this, you know, when we are going to be close to this point, we can use it as a high probability point, I would say, you know, that is going to be a reversal and we can enter, for example, a long trade in this case. Why? Because the margin that we would have from here, which would have as a stop loss, it would give us a much bigger margin, like for example, go to the middle point or even go to, you know, the entire point. Because we know that based on the previous statistic, you know, this asset is going to move this direction. But yeah, maybe, you know, this type of concepts are a little bit more difficult to apply, you know, to the normal trading, because it's more meant, you know, for the option trading, because we have the possibility to create, you know, like type of side market strategy or bearish side market strategy, you know, and so on. But however, you know, from my test, they also tend to work, you know, for the manual trading as well. So yeah, like I said, this is mostly, you know, designed for the long, for the day trade, you know, for shorter time frames. Maybe you can apply it with the swing, but mostly, you know, I did it with a short time frame. Yeah. So now that we understood the concept that we have, you know, for the volatility channel, at the same time, I would like to explain the distribution. So I applied, you know, I like this concept a lot. And in this case, for example, it's a very simple concept at the same time, you know, in terms of the logic. So I'm taking, for example, the last 6 candles, the last 12 candles, or the last 48 candles. In this case, for example, this would be the equivalent of half an hour, 1 hour, and 4 hours time frames, which is more or less the design time frames you are supposed to use, with this type of time frame, like 5 minutes or 15 minutes. So in this case, for example, I am looking at the distribution of the candles, and we can see that, for example, in the last 6 candles, we had 56% bullish, so we had more bullish than bearish candles. However, in the last 1 hour, for example, it's kind of break even, and in the last 4 hours, we can see that the short trend is still there. But by seeing this, and at the same time seeing this, that we are close to this channel, we can kind of estimate that, we are going to have probability of the increase of having the, a small bearish movement, a small bullish movement. And we can see, for example, how slowly the 1 hour and the 4 hours reversed as well, giving us, this possibility when we would be here. If you would like to enter in that long trade, and scalp like 1% or 2%, then you would be able to take it. So yeah, this is kind of another way that can be applied to it. However, this distribution, like I said, take it as well with a grain of salt, because not always is going to tell you exactly what's going to happen. But yeah, I find out that, some people are actually making good use, of this tool. And I was like, okay, why not? I'm going to implement it as well, with this script. So yeah, and yeah, that's more or less what I have for you for today. So I hope you enjoy it, and if you have any questions, let me know regarding this tool. All the details can be found on traderlife.com, and as well, if you want to, here for example, you would have the Telegram group where you can find me, or the Discord, YouTube, and so on. So yeah, thank you for watching, and see you next time. Bye bye.